What's up everybody, welcome to the Stocks channel. My name is Corey and today we had another volatile day in the stock market, printing a doji candle the day before FOMC. The markets are very volatile and definitely becoming very oversold, so the question is, where are we going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.22% and we did close just below 436 and we're still trading below the 200 simple moving average. So the real question from here is this just going to be a stock market correction because SPY is now down about 12.3% from the all-time high, or are we going to see that full-blown bear market going down 20% or more? So the way you're going to know that is by paying attention to this very critical support level down here at 420, which may or may not have been the bottom in the market. Remember, we saw a very strong reversal off of that low just yesterday, and we could still retest that low before we go back into any bull cycles. And yes, we could still go for another leg lower and still go back into another bull cycle. But we're getting closer and closer to that bear market territory, especially on the QQQ, so you will want to watch those very critical bottom levels. If we do see SPY breaking down below 420, you're going to want to watch for support right around 411, and that will be a very strong support level. So in the event that that was not the bottom, we're more than likely going to see a counter trend rally, and we're more than likely going to see SPY at least hitting 450 and possibly even going higher to about 453 and maybe even 462. Any of these levels could act as resistance and we could see the next lower in SPY, and the question is going to be whether or not it's a higher low and then we break out and go into another bull cycle, or are we going to print a lower low and go down to 411 and then try to break out from there? So you need to watch these resistance levels very closely and watch the price action. In the scenario that we go up to 450, it's going to be very impulsive and it's going to look very bullish, but that doesn't guarantee that this downtrend is over. Remember, it's a downtrend until it's not. So if you're not sure how to trade this market, you're much better off just going in the direction of the trend, which means you should be assuming more downside after we get the strong bounce. Remember that all markets bounce, especially when they're getting oversold, and we do have a huge catalyst going into earnings, and we also have FOMC. So there's no guarantee that has to lead to an upward bounce, but I think at this point in the game, the stock market is pricing in most of the worst case scenarios, so it isn't going to take a lot of good news to send the stock market much higher from here. So look for that counter trend bounce up to about 450 to 462. And then if we start reversing and we fail to break above 462, we could still come back down for another leg lower. So we'll need to watch the price action in this very volatile market very closely. And as you can tell, the support and resistance levels are very far apart because we do have a very volatile market and we're easily seeing 2 to 3% swings like they're absolutely nothing. That's what you should expect in a volatile market because there's going to be wild price action swings in both directions. And when you start feeling like the stock market can never go back up again, you're usually getting very close to the bottom. So watch that very critical level at 420 and watch that very critical breakout level at 450 and 462. If we can get back over that 200 simple moving average and reclaim that level as support, that will also be a bullish development, and that level is right around SPY 442. Jumping over to the NASDAQ 100 QQQs, you can see we were down 2.32% today, and we did come back down to test that support level at 342. Remember, the possible bottom in the QQQs is down here at 334, and there's no guarantee that we have to go back to retest that level. But if we do go to retest that level, we're more than likely going to do it after a counter trend rally from here. So your critical resistance levels to pay attention to on the QQQs will be right around 352, 360, and right around 369. The 200 simple moving average is right around 365, so that will be another resistance level to pay attention to. So if we start to bounce from here, you're looking for resistance at any of those levels, and if we see a rejection, you're looking to see if we get that higher low formation and then bounce and form the higher high, which will be the bullish breakout, or you're looking for a continuation of the downtrend down to the next support level right around 329, and below that we could go close the gap right around 322 and 315. So don't rule out the possibility the QQQs is trying to go into a bear market, and if you look at the QQQs from the highs to the low here, we have drawn down a total of about 18%, so we're just a couple of percent away from that 20% mark, which does say that you're more than likely in a bear market. So if we see the QQQs going down much lower and breaking below that low at 334, we're more than likely going to see a bear market, which tells us we're going to be in a prolonged downtrend, which means we should be expecting lower highs and lower lows until we see a definitive bullish breakout. So at this point in the game, we could see this is a very impulsive sell-off, which does usually start the beginning of a bear market, but there's no guarantee that we have to go into a bear market from here because it is possible we're still in that full-blown stock market correction territory. And after a correction, you can resume the macro level bull trend. So don't rule out the possibility if we do see that bullish breakout. So the bullish breakouts on the triple Qs will be back above 370 and also back above 383. So watch those levels very closely. The higher high on the daily chart will be just above 389. So that will be the confirmation that we're back on the bull and we could see new all-time highs. And as you can tell, that is a long ways away. And we did get the crossover of all the moving averages to the bear side. So we do have a full bear trend. Don't necessarily put too much weight on that, because if we do go back to the March 2020 crash, you can see that we did have the full bear trend and we were also very close to the bottom of that crash, and we did go back into another bull cycle after that. So it does take a long time to reverse this price action, but as you can tell, even after a very volatile crash, there's always going to be a bounce that follows, and you will usually retrace about 50% of the amount that you crashed. So even if the stock market is going to crash from here, and even if it is going into a bear market, it is not just going to be a straight line down forever. So if you're thinking about panic selling at these lows and you want to puke on your shoes, remember that a lot of people think that's a buying opportunity. And if you're panic selling, you're just transferring your shares to smart money who knows these are great buying levels. So do whatever fits your risk management, but I would never suggest selling down here at these levels. And if you're thinking about selling your long positions, you're more than likely going to want to get out at one of these resistance levels when we do get that counter trend rally. On the Dow Jones, we were down 0.25% today, and you can see the Dow Jones is holding up pretty strong today. And at one point we were closing up in here in the green, and we did see that end of the day sell off. So we did close a little bit in the red. The Dow Jones is struggling to break back above the support trend line right around 343, and we did close just below that level. So your strong resistance levels on the Dow Jones will be 343, 347, the 200 simple moving average at 350, and then the gap closes at 356 and 360, and the gap close at 360 will be a bullish breakout. To the downside, look for support at 340, 338, and the potential bottom is down here right around 331.5. If we break below 331.5, we're more than likely going to 324, and that will likely be the next leg lower before we can see a much larger counter trend rally before we see any more downside in the Dow Jones. In the Russell 2000, we were down 1.33% today, and we still see the Russell 2000 holding above this critical support trend line right around 196, so that level has not yet failed. Remember, we need to see closing prices below that and price action breaking below 191, and that will confirm that we're likely seeing the Russell 2000 going to 170. The bullish breakout levels will be back above 205 and then back above 212, and above that we'll be looking for a breakout above 219 to 220. Above 220, we're more than likely going to close that gap just above 228, and we will have resistance at 226. On the ARKK ETF, we were down 3.73% today, but we still see price action closing above that very critical support level at $70. Remember, that could mark the bottom in this ETF, and so far the low to hold up is just above 65. So if ARKK starts breaking below 65, you're looking for the next strongest support level at $60. And remember, this is definitely a very strong bear market, so there's no reason to believe that it's going back on the bull until we get a bullish breakout back above 85, back above 91, and then closing back above 99. So it's a downtrend until it's not, and look for a very critical close below $70 to tell us that we could be going down to 60. The VIX was up 4.28% today, closing just above 31, so we definitely still have a lot of volatility with the VIX closing above 30. Remember, to get back on the bull, we need to see the VIX closing back below 24 and then closing back below 20. So as long as the VIX is above 24, you need to be very cautious, and this could be signaling that we are indeed going into a bear market. So if the next time we see the VIX getting crushed, it comes down to 24 and finds support off of that level and starts to bounce, we're more than likely going into a bear market and we're going to see a lot more downside. But remember, that's more than likely not coming until we at least see a bounce from these levels, and we are more than likely due for a counter trend rally once we complete a 5-wave structure to the downside. On Bitcoin, we're currently up 0.75% today, and we see Bitcoin trading right around 37,000. The bullish breakout on Bitcoin will be back above 41,000 and then breaking back above 46,000. Downside support, if we get rejected at resistance here at 38,000, will be right around 31,700, and we will have support right around $30,000 as well. Below that, we're more than likely going to $20,000, so it's really do or die for the bulls to hold this support level at 30K. Don't get bullish until you see the price action breakouts, because we clearly have a very strong bear market and a very strong bear trend. On NVIDIA stock, we were down 4.48% today, and we closed just above the 200 simple moving average for the second day in a row after we did see that level holding up as support. Your potential bottom to pay attention to is right around 209 to 210, and if we break below that support at 210, you're looking for a quick trip down to 197. Your bullish breakout levels will be back above about 253 and then back above about 271, and above that you're looking for a breakout above 285. So there's a lot of resistance to the upside, and this is clearly a bear trend with all the moving averages stacked to the bear side and price action trying to hold up above this critical support at the 200 simple moving average. So watch that 200 simple moving average at 221, and below that you're looking for a potential double bottom off of 210, otherwise a quick trip to 197. On Tesla stock, we were down 1.25% today, but we did close the gap above at 940. So there's one more gap left on this chart, and it is down here at 843, and we're definitely seeing a lot of bearish momentum going into earnings. So I would not be surprised to see earnings coming down to close this gap at 843 on Tesla, no matter how earnings goes. Remember, earnings are a coin flip and it could go up and down in either direction no matter what the news is, so don't just assume because you get good earnings that you have to go higher. Look for that gap close at 843 and a retest of the 200 simple moving average right around 812, and below that we will see Tesla in a bear market. Your bullish breakout is back above $1,000, and if we can reclaim that level as support, we could see another bull cycle. On Apple stock, we were down 1.14% today, and we still see Apple holding above that support level at 157, which was a price target for the correction. So it's possible Apple already had the full-blown correction, or we're going to see a bounce back up to resistance around 167 to 168 before the next leg lower. The next leg lower will likely take us down to 153 or the 200 simple moving average just above 147. So watch those critical support levels and understand that we are in a bearish trend, which means we do expect to see more downside until we can see a price action breakout back above 168. The financial sector was up 0.42% today, and we're still holding above the 200 simple moving average, and we still do have a gap to fill above at $41. The industrials were down 0.98% today, losing that support trend line and definitely starting to develop some bearish momentum. The healthcare sector was down 0.64% today, with the third day in a row closing below the 200 simple moving average, and it's starting to look like this is a full-blown correction that could be coming to a close soon. Don't forget, we still do have a gap above right around 141. The energy sector had a very bullish day today, going up 3.88% and closing back above the previous high, so this is definitely a bullish breakout, and you can clearly see bullish price action with a very strong bull trend. So jumping back over the S&P 500, don't forget that we have FOMC tomorrow, and we have a lot of big tech earnings coming up just around the corner. This is going to remain a very volatile market, which means you're going to see wild swings in both directions, so don't just assume the stock market has to continue going lower from here. Every bear market has a huge counter trend rally, and every correction eventually does have a lower high before you see more downside. So right now, this is the definition of a falling knife, so plan accordingly and make sure that you have a great risk management strategy and you're following a plan that's going to remain profitable, because this is going to be a very difficult market to trade, and the easy days of just blindly buying the dip are over, because for all we know, the stock market is rolling over and we could be going into a bear market. So look for that possibility of a lower high before more downside, or the confirmation that we are getting the bullish breakout. Don't forget that I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Bank Trade Alerts beats the market every year and has never had a negative year, and even if the market goes into a bear market like in 2008, when everybody was losing money, Bank Trade Alerts beat the market and made over 90% that year. If you're interested in learning more about Bank Trade Alerts or how to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord, where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade, and I'm bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Stocks Channel Discord by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.